I've been researching real-world asset tokenizations, and I truly believe they are one of the huge narratives yet to hit the crypto markets, and it's going to be one of the biggest narratives for the next bull run. Now, I've come across this article on CoinDesk. It is not a new article, but it explains very, very well why real-world asset tokenization might just be the next major narrative. So, going by technology theorist Carlota Perez's research, RWAs may well be the next phase of the substantive crypto development, and the headline reads, "The $1 trillion crypto opportunity, real-world asset tokenization." Now, according to the eminent Professor Carlota Perez, technology is adopted in predictable waves. Exuberant bubbles are followed by seemingly existential crashes prior to long golden ages of growth. We saw such a pattern back in 2001 when the so-called dot-com bubble burst and the New York Times declared .com is .gone and the dream with it. Fast forward to today, and we have witnessed over 2 decades and trillions of dollars of sustained growth, together with the transformation of the old economy. This growth was punctuated, as Perez predicted, by bubbles and crashes approximately every 20 years. Web3 is another technological revolution which is undergoing this familiar boom and bust cycle. Until now, Web3 has succeeded in installing a cluster of technologies with enormous potential for economic growth and transformation. DeFi, or decentralized finance, has installed the infrastructure to enable a new financial system which replaces intermediaries with code and replaces trust with the assurance of immutable smart contracts. However, until now, DeFi has mostly transacted magic internet money in the form of crypto tokens. Similarly, non-fungible tokens, or NFTs, have solved some of the problems of digital scarcity and enabled the democratization of creativity, but their use has mostly been confined to digital art, culture, and memes. In other words, DeFi and NFTs may leverage superior technology, but are transacted primarily with volatile small market cap digital assets. According to Perez, this is both valuable and normal. New technological infrastructure is laid down in the initial installation period during a frenzy of investment, which is followed by inevitably a failure to meet such high expectations and a financial crash. However, it is this superior technological infrastructure that typically then forms the basis of the next phase of growth. A thesis increasingly shared within crypto and traditional finance is that the tokenization of real-world assets, or RWAs, will form the backbone of the next bull run and unlock the transfer of trillions of dollars of value into crypto. Or in Perez's terms, real-world asset tokenization will unlock a new golden age in blockchain and traditional finance. This is already happening right now. The current state of play is that traditional finance giants, including BlackRock and Fidelity, along with RWA startups like T0, Securitize, and Polymath. Polymath I've already covered in a video in my series regarding tokenization of assets. Check that out in my bio. But they are using blockchain to tokenize assets that actually comport into the real world. These categories include commodities, fine art, real estate, and financial instruments such as stocks and bonds. To quote BlackRock CEO Larry Fink, the next generation for markets, the next generation for securities, will be the tokenization of said securities. Here, RWA tokenization merely reduces the role of intermediaries, while enabling faster, cheaper, and more transparent transactions. The full potential of Web3 technology is not yet being fully realized, since most RWA tokenization platforms require trust in some sort of intermediary to honor the redemption of the tokenized assets. If the intermediary evaporates, then so too can the claim on the underlying asset, and this problem is being referred to as the physical asset oracle problem and can be demonstrated with an example. If Alice tokenizes her car and Bob buys the token, how can Bob be sure he'll receive the car? Now, that's not something that the blockchain can solve directly, as it always involves an amount of human coordination and trust. However, there is an alternative, more natively Web3 way of addressing the problem. Instead of tokenizing the physical asset directly, protocols can lock up parties' commitments to execute a commercial exchange as a type of forward contract, encoded within the smart contracts and tokenized as redeemable NFTs. When a dispute happens, it can be handled by an algorithm encoded within a smart contract that refers to its decentralized dispute resolvers. The result is trust-minimized tokenization, exchange, and settlement of RWS. Such protocols provide a more rigorous answer to the fundamental question of tokenization. How can we ensure claims are met? And convey the same level of assurance as DeFi, since transactions cannot be reversed, rescinded, or censored. This level of assurance provides harder tokenized assets, real-world assets, whose reliability enables them to be foundations of a smarter, more programmable economy. And this has to work. Otherwise, if a trusted intermediary is required, it brings back everything in the blockchain is supposed to avoid, like counterparty risk, friction, and monopoly power. As mentioned previously, I'm very, very bullish on real-world asset tokenization. I'm doing a series of them. They are linked in my TikTok bio. Please go and check them out. We've so far covered Polymesh, Polymath, and Alliance Block. There will be more coming very, very soon, because this is a growing area of interest and definitely worth investigation in terms of long-term investment. Like, follow, and comment for more.